The American consumer overall is better, but not dramatically as better off than 10 years ago, even somewhat better off than 20 years ago. But you're quite right in that there's been considerable inequality in terms of the progress of people financially during that period. We don't have broad ideas about, I mean, we don't make decisions on what business we buy based on some sweeping future projections about things. We think America will do pretty well over time. In fact, we're quite sure it will do pretty well over time, and that our kids will live better than we live. My kids would say that wouldn't be so difficult. And the grandchildren will live better. That has been the history of the American economy. The real income per capita grew sevenfold, I believe, in the 20th century. That is huge. It cost $18, as I remember, to make a 3-minute station-to-station call from New York to San Francisco 40 years after the telephone was invented. And at the time, the $18 was more than the average weekly wage in the United States. Think if some little kid had picked up the phone on the other end and there went the whole weekly wage while you tried to get, your daughter on the phone or whatever. So people will be better off in this country decade after decade. But we're not big on being futurologists or anything at Berkshire. I will tell you this, in terms of our consumer businesses right now, they're very soft. Our furniture and jewelry businesses generally, candy businesses dealing with consumer day by day are soft. And in the first quarter, their earnings were down. One of the things you have to think about, and people don't focus on this very much, but you read about GDP, and this is one reason I really think we've been in a recession now, not a huge one, or not a violent one, but for over 2 years. When the government talks about GDP, they talk about GDP, we'll say, going up 2%. But of course, the population of the country, goes up something over 1% per year. So it's per capita GDP that counts, and that has gone very close to no place. But the more important factor, to some extent, is that GDP counts the people that have you take off your shoes when you go to get on an airplane. It counts extra police. It counts all of these things that don't really translate into they translate into goods and services that the country wants, but they're not goods and services. I mean, they're goods and services we wish we didn't want, and all of that counts the same way. If there's 20 guards at the airport instead of 3 guards, that goes into GDP. But does it make you feel any better about how you're spending your paycheck every month? Probably not. And when you get into a war, for example, if you drop planes into the ocean, that's part of GDP, the cost of manufacturing those planes. But it doesn't do anything for you at your house. So in terms of what I would call desirable GDP, I think my guess is that on a per capita basis, that has gone no place in the last few years as we've diverted resources to other things that don't really translate to what goes into your house or onto your table. And the quality of GDP is something that is not really talked about very much when you pick up the economic reports every day. Charlie?
Yeah, and the type of figures you gave us about inequality tend to obscure a basic and important fact. If the same families were permanently at the top of the economic heap, there'd be huge resentments about current inequality. But when the coupon clippers and the DuPont family go down and somebody creates something like Pampered Chef and comes up, in a real sense, something wonderful is happening in terms of equality, even though at the end it looks like there's been no progress. That much churn makes people think the whole system is fair.